What are you doing, Mark? How you doing, broski? You good? Monday, Monday, Monday. Okay.
Amazon, we got this reporting overnight from the Wall Street Journal that they were thinking among some of the height at Tesla,
All right. So,
of the carnage and some of the boycotts
so far
that
for
were being
today,
made to
we've
them
got
being the
Labor
CEO
Day
to replace Elon Musk. What do you make of
for a
that?
lot of Europe, a little bit of Asia as well. The main thing that I'm looking for in terms of today's initial jobless claims, I don't really expect us to do much today. Like, I don't expect a crazy range today. Tuesday's range was very quiet across the range, like across all pairs. Wednesday's range was better, right? When we look at gold, especially into Tokyo, we extended even more. So, in terms of today and where we're currently sitting, I don't think we will get much because the main driver of the week, which is NFP, is tomorrow, right? But in terms of gold, I kind of just want to see gold to keep dropping. You know, if we can see gold at 30, what is that, 31.93 today, that's perfectly fine. I do think gold has definitely got a long way to still keep coming down, you know. I'm happy at least we finally broke through this range here that we were stuck in. And now that we've dropped lower, we can see what part price wants to do. Okay. Money day gift. I'm good, Mark. Thank you for asking, bro. You know, I'm a little bit, wounded up by EU. You know, in terms of taking that L on Tuesday and then it just dropping and playing out anyways is a little bit annoying, but what can you do, eh? What can you do? So right now, the price action I'm seeing on EU and the dollar looks quite conclusive to keep on pushing, right? So I'm gonna see if we can get a continuation play from here. Gift says so. Trump is coming back to his senses. I mean, we'll have to see. We'll have to see. We'll have to see because, you know, apparently there was a conversation had by CEOs of some of the biggest companies in America, and they had a meeting with Trump and said to him, look, we don't know what you're doing, right? But if these tariffs don't stop, we are talking empty shelves across the board, right? So I think now he's thinking about his policies and thinking, okay, maybe I should potentially dial back on some of them and whatnot. So we'll see. We'll see. We'll see. We'll see.
I'm guessing you're at the airport, Dan. Travel safely. I am. It's good to see you, sir. Thank you. Thanks for making time for us. Dan Ives of Webfresh.
It was all. Mark says there was a part of me that was always thought it would get to this. It was all bravado. Trump trying to push his weight. He thinks he's still on The Apprentice, bullying everyone. Yeah, I mean, look, America just doesn't have well, it definitely has the military might, but it doesn't have the same pull as it did, 50 years ago, right? A lot of other countries have taken steps to potentially pull away from them. So what we're kind of seeing now, I'm not entirely surprised about, you know. So I'm trying to see if we can drop from here. It's not a concrete move, right? Because I am trying to see if we are going to be onside or offside. I do see this continuing. If we go back to my target that I set out for you guys at the start of the week, was for us to engulf this high here. Okay, so we've obviously taken out target 1. but we need this weekly candle to go for April 24th candles high. That's what we need. You know, so far we've had a pullback, right? Fine. So I want to see us really, really stretch. And to be honest, if we stretch a lot further up, then NFP's done its thing. All right. So right now we're okay. Like price action's okay. News in 3 minutes. Yep, that's it. News is in 3 minutes. So I'm just watching this area that we're currently in. News is in a little bit. I'm gonna take a small position on this. Again, like it's not a setup where I'm confident in, but I just want to see if I'm onside or offside. So I'm gonna take a little stab, if you will. A little stab at it. I'm gonna see if this gets down there. Right, news in 2 minutes 30. I mean, it's not, to be honest with you guys, yeah, it's not a terrible area to look for a trade. It's not. It's not at all. Do I think it's great? No, I don't.
The only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high yield investment.
Okay, so let's see what happens.
Join me on Horizons Middle East and Africa for the stories, news.
We've got news in a little bit, news in a little bit.
Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on.
Like realistically for EU, I wanted to take a short on EU higher. Right? I was looking around this area, but ideally I want us to reach towards the near of yesterday's high. That's the best case scenario of where I would like to take a short from. Okay, like I wanted to see us actually reach a lot higher, but if we don't, then that's fine. Alright, news is here. Let's take a look. Still waiting for investing.com to update.
S&P 500, 7 straight, extended the longest winning streak of the year so far. Looking for day 8 and up nicely again this morning. Lifted by what's happening elsewhere from big tech, from Meta,
Dollars dropping.
Microsoft. Equity futures up this
Dollars
morning,
dropping.
1 percentage point on the Nasdaq.
So initial jobless claims is worse than expected. Oof, okay. It's worse than expected. The forecasted data was 224k. The actual data was 241k. Okay, so there is a slight difference there. So if we're gonna see this push higher, that's perfectly fine.
Is at this point, because the question is what happens tomorrow when we get the jobs numbers. At this point.
Okay, so let's see what this wants to do. You know, the only problem with the EU is there's a lot of chop inside of here. So what I will most likely do is play a session as the setup to go short if we can get up here. Right, so I'm going to set some alerts for that and then leave it alone for now and take a look at gold. Gold, you know, every time I step away from gold and I come back to gold, you know, gold pays me. You know, gold treats me well. So it's like, I don't know, guys. Gold is very topsy-turvy sometimes, you know. Anyways. So looking at gold right now, if I take a look at the daily picture, okay, so we're in an area where we can actually push up, right? Simply, we're inside of this daily down candle. It's a sufficient enough area for us to actually get a push to the upside, you know. However, like I posted inside of the Discord yesterday, and guys, if you're not inside the Discord, link to the Discord is in the description box down below, right? I sent out to you guys letting you know that US has reached out to China for tariff discussions, right? Not China reaching out to US, which is very, very key, right? So this has caused a lot of the commodity market to come down, right? Gold's dropped overnight as well. ETH has pumped up, Bitcoin has pumped up. Most of the crypto market has had a move to the upside, right? Which is fine. Now, realistically, in terms of what I'm seeing right now for gold, I do want to see gold hold this range here. I don't want to see gold come above this morning's high, right? I think we're very, very close to the overall target, and I would like to see us hold this hourly candle once again, the same hourly candle that we held during the morning, right? So ideally, no matter how large the pump to the upside is or the drop is, whatnot, I would still like to hold out. Okay, I would still like to hold out for this area here, right? If we take the short from around the hourly candle, we give it 100 pips. I think 100 pips should be sufficient. No, 100 pips isn't sufficient. So let's give it 150 pips, right? And then we target the low, which is almost a 1 to 3 hour trade. Okay, I want us to give a very, very large, stop loss. Give it enough room to breathe, right? Another thing to also bear in mind is if that daily candle is going to give us a buy move, right? If the daily candle is going to hold, aka i.e. this one, especially for today, because NFP is tomorrow. So I'm not really expecting any major areas of liquidity to be taken out today per se. I kind of want to see a range being formed or a high being formed or low being formed for us to then take it out tomorrow. So again, that's what I would keep my eyes out for. If we get a pullback up into there, this is a prime area for a pullback for us to then go short. Okay, this hourly imbalance. Now again, like I said, I'm going to look to start going short here from the same area we had this morning, right? If not, we will look at the hourly imbalance slightly above. Okay, gold is very, very shallow right now in terms of its pullbacks. I do think gold's about to stretch lower. Now, a small part of me does think this can get real, real messy. Like gold can, now that if Trump really wants to calm down, okay, if everything wants to calm down, like I wouldn't be surprised if we see gold back at 280 to 850. Like I'm talking like a real, real, real deep retracement. Like I would not be surprised if we get that. Okay. So I'm trying to anticipate where we're gonna find those bigger moves and plant ourselves in them, right? So that's the play for this afternoon. We're just gonna wait for those setups to play out and we can make a move based off of that. So again, EU, if EU can push higher, right, we can look to take a trade from there, cover the daily high, and then target the lows down below. Right, this might take a couple of days to play out, but it's better to have a wider stop in these current market conditions than to not.
Wait and see mode. How many times have we heard that phrase?
And how that's going to translate into very noisy data that may give one signal, but maybe not the one that's the correct one. In other words, could we see negativity?
Okay, cool. So for the rest of you guys, do you all have any setups that you're looking out for? Any trades that you've been in or are looking to get into? Let me know. Let me know in the chat, guys. Let me know in the chat.
What I'm looking for is it going to be more frequent? Are we going to get more frequent pullbacks from employers who are like, let's wait and see, let's brace ourselves for what's coming? We don't know that. So far, even if there was a hesitancy, as I said, there was a rebound the previous month. So at ADP, we have a
What do you guys think about gold?
Jobs, but hours, because before an employer cuts a job, they cut an hour. We actually saw that hours ticked up. Then we went into payrolls. We pay about 1 in 6 workers in the United States. We saw for people who switch.
I want to hear your opinions. What do you guys think about gold?
So the elements of the labor market are still solid. It really looks like employers are taking a pause, especially when there was a lot of uncertainty in that mid-April timeframe.
You say, as you look at all of this data, that you don't see a recession anywhere in here. This looks like really a strong labor market. How quickly could that change? I mean, is that something that is vulnerable, or is this really a very solid backdrop with a lot of uncertainty? Because why would anyone make big moves right now?
Right.
So every year you're going into a year with a 1 in 4 chance of recession, about 25%. And so the question always is, what's the trigger? Well, we know what the trigger is in this point, how people are responding to what could be a transition in terms of higher prices from tariffs. The trigger is obvious to everyone. It's not always obvious going into a recession. We're also going into, we're still in an environment with higher than normal inflation and interest rates. So there is some trigger components that could lead to softness this year. But it's not yet coming from the labor market. It's not yet coming from a reduction in consumer resilience to the point that it's troubling. Even if you look at that contraction in the GDP numbers in the first 3 months of the year, you saw a moderated consumer, but not a down and out consumer. You saw that, domestic, the real economy grew by 3%, even as those imports swamped that growth. So Main Street's still okay. We don't know how long that lasts yet.
We're going to get ISM manufacturing data a little bit later this morning, and there's this question about whether some of the changes are going to cause employers to pull employment back to the United States, particularly in the industrialized sector. Are you seeing any signs of that, any increase in hiring?
Yeah. In fact, for the goods sector, it was pretty stable, but it wasn't as strong as it was the last
Okay.
manufacturing. We also
Gift says in the chat, wanting to short gold.
I don't credit that with bringing
Just
employers
patiently waiting at the moment.
back to the
I think it's
US.
gonna drop lower, to be honest. Yeah, waiting for a better entry. Not sure from where though.
What that
Joe,
says
Money
is that
Day,
you're
broski.
interested in
How you
working with
doing?
people. You're
White
bringing
House speaking right now,
insights,
right?
you're bringing
Where did you see that
incentives
info
for having
gift?
to invest,
With
for
the White
having
House
to
speaking.
manufacture. This is not a 3-month turnaround story. This is a yearly, maybe even decade-long story. So we're not going to see that impact very, very quickly. This is really employers responding to the here and now of the policy rather than making big bets on the next 10 years.
Anita, I really appreciate this framing because I think it's so important. If we do get a weak number tomorrow, the way you describe it, it's employers basically reacting to an event to go into wait-and-see mode, and not the start of a process for them where they start to lay people off, which could mean we start to go into recession. Now, you can do that for 1 month. Problem is, you start to do that for 2, 3, 4, it takes on a life of its own, and that's the risk here. That's why you're playing with fire with these kind of policies.
And it's also the reason why you're playing with fire when you extrapolate out a trend line based on one data point that might confirm a bias in the market, which is that things are going to be weakening. If you look under the hood, as Neela was saying, I think that is the most important, that hours actually went up and that pay increased for people who switched jobs. This is not the hallmarks of a market that is absolutely tanking.
If we get a weak number tomorrow, I'm pretty sure a lot of people will extrapolate that
100%.
like several years.
Yes.
End of cycle type stuff. Nita, thank you. It's good to see you.
Always
as
a
always.
pleasure. Thank
Nita
you.
Richardson of ADP will attempt to bring some balance to that conversation if we do get a downside surprise. Mike McKee joins us now for more. Mike, I want to talk about not just the labour market data, but a potential Fed response to it. You're going to catch up with the Fed chair, Jay Powell, next week when you head down to Washington, D.C. for the news conference. Now, nobody's expecting a change to policy, but Mike, I'd love a question from you to him if possible. The Treasury
Seen
Secretary
it on Sky News,
this
okay.
morning that the fact that the 2-year yield was trading below
I
Fed
got you.
funds was evidence that the Fed was too tight. Mike, how do you think the Fed would respond to that as a question?
I think at this point, the Fed would probably look beyond it and say, we don't know that. I mean, we want it tight right now because we're still trying to bring down inflation to its target, but the tariffs could be inflationary. And the last thing the Fed would want to do is cut rates and then have to raise them again if inflation started to go up again. So they would dismiss something like that. I do want to point out, John, that tomorrow, the idea of a weak number is kind of off the mark for the Fed because the Fed's going to look at the unemployment rate rather than the number of jobs created. 138,000 would be.
I would leave gold for now, guys. Just let it accumulate, let it print a little bit more.
So they wouldn't worry about it, but it may get the market's attention.
Let it do its thing.
On the unemployment rate, because that suggests then that companies are taking active efforts to manage a downturn.
Unemployment at the moment, 4.2%. The estimate for tomorrow morning, 4.2%. Mike, thank you, sir. Mike McKee joining us on the data and a look ahead to the Federal Reserve next week. To extend that conversation with us around the table now, Ian Lingon.
Guys, if you're watching the stream right now, you enjoying the stream, don't forget to leave a like
I'm going to repeat that
on the
question for you.
stream. Helps the
Treasury
YouTube
Secretary Scott
algorithms.
Bessent said because the 2-year yield is trading below Fed funds, it's evidence that they are too tight and they should cut interest rates. What's your response to that?
It's suggesting that the market anticipates that over the course of the next 24 months, effective Fed funds is going to be lower than it is. That doesn't mean that now is the time to cut. That just means that the market is telling us that the Fed will resume normalization at one point.
Does it concern you that there is so much discussion around Fed policy from administration officials?
Well, we came into this knowing that there was going to be some political pressure put on Powell. There's been conversations coming out of the White House about removing him. I don't think that that's really in the cards.
Got a little bit of chop right now.
It's not
Just a
surprising,
little bit.
however, that we have started to see some negotiations with potential replacements for Powell coming into, whether it's via the media, whether it's conversations that are being had at the White House. So I'm not really surprised, but somewhat apprehensive of the uncertainty created by this political pressure.
Well, that's what I was going to say. On the margins, does this affect not just Fed policy, but also how the market responds to it if there is this feeling that there will be
Okay,
some
so
cuts coming,
gold is
there could
pushing
be a
up a
shadow
little bit,
effect, there
just
is
slowly,
that
slowly,
concern
slowly,
about
but it is
the
heading
market
up
where
there.
Fed officials may feel like
Let's see
any
what
signal
GDX is doing.
wants to
GDX is
continue
down
to
pre-market
be
again
polarized,
today.
both in the market and in the White House.
It's been down pre-market for the past 2 days
It's
now.
for the administration to be pushing back against any given Fed or any head of the Fed. But what I think what's so unique in this cycle is how vocal and how real time it has become. Typically, you would expect any sitting president to want the easiest monetary policy possible, but Powell's objectives are for the long-term stability and health of the U.S. economy, which involves price stability, and that's the battle he's fighting at the moment.
Ian, because it's so vocal, and the Fed chair had to come out and say this is inappropriate in a sense, saying by law he's allowed to stay in his job. Does it make it harder for them to cut rates if they had to? Because then it just looks like they're placating the President of the United States.
Well, I think something that we've learned over the course of the last several weeks is, yes, there's a Powell put, but there's also a Trump put, and the Trump put is struck higher than the Powell put. Powell doesn't want to encourage and reinforce behavior in the White House that isn't necessarily going to be good for the long-term health of the economy. And so, to your point, I think that when Powell deems it time to resume normalization, that's when it happens, and he won't give in to the political pressure.
Following the Treasury Secretary's comments about the 2-year rate below the Fed funds rate, Neil Dutta put out a note and said wage and salary growth is running below the level of Fed funds rate as well, meaning it's already too tight. What do you make of that argument?
Well, I will argue that the bulk of what has occurred over the last 6 or 8 weeks has been
Interesting.
uncertainty-inducing.
Dollar's heading straight back up there.
That as some
EU's dropping straight back down.
could suggest that it's time to cut rates, that the market is focused on those aspects of it. There's also aspects of the data that suggest that the Fed should continue to remain on hold until September or later, which is actually my assumption at this point.
It's a really difficult moment. Take the numbers from Visa. We mentioned this just yesterday. We've not seen any signs of overall consumer spending weakening. That's from the CEO. From McDonald's right now. This is what they're saying. They're cautious about the overall health of the consumer. They're seeing pressure hitting the middle-income consumer in America and elsewhere. Pick your poison right now. It's difficult.
And that's the reason why cruise liners are up. But if you look at one cruise liner, it's up, but maybe not the other. And then you have people saying, well, sometimes companies are just trying to use the circumstances as an excuse to talk about weakness that might have already been present in their business models. It is difficult to understand whether this consumer is going to be tolerant of price increases or not, which is the reason why you might see some testing by companies to see, let's get a sense, can they absorb this and can we pass it along?
I don't think it gets any easier from here. You're going to see way more distortions in the data for weeks, maybe even months to come. Ian, it's wonderful to catch up with you, sir. Appreciate it. Ian Lingen there of BMO Capital Markets. Equity futures at the moment on the S&P 500 higher by about 1 full percentage point with an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara Hacker. Say Yahara.
Hi, John. Recapping that latest data, an upside surprise to jobless claims hitting their highest level last week since February. Initial claims coming in at 241,000. The median in a Bloomberg survey of economists was calling for 223,000 applications. Continuing claims also rising to 1.9 million. And McDonald's shares are falling nearly 1.5% after reporting a sales decline in the first quarter. Sales dropped 1% globally compared to a year ago, driven by a big decline in sales in the
Mackey's is down, yeah?
that McDonald's focus on value meals has not been enough to get anxious consumers to spend.
I don't know about you lot, but McDonald's just doesn't hit the same no more. Like I remember I used to go to McDonald's like every other day. Monday I went, Wednesday I'll go, Friday I'll go. But now it's like I just never go Mackey's anymore.
As relief for automakers by lowering some levies on imported vehicles and parts. That's your Bloomberg Brief. John?
Hara, thank you. Thanks for this morning. Up next on the program, we'll set you up.
To be honest, even fast food in general, like, just haven't been feeling it.
Amazon from New York. You're watching Bloomberg TV.
But one thing I am a sucker for is a cheeky bit of Chinese. Yeah? Bosh. A cheeky bit of Chinese is a bit of me. You guys tell me what's your go-to Chinese order? What's your go-to? Gift says Chinese or Nando's for me. Yeah, Nandino's ain't bad. But I feel like if I had to choose between Nando's and Chinese, I'll probably pick Chinese, you know. Because for me, Nando's is just chicken and chips. Like, there's not much variance. What's your go-to Chinese order? Mine will be extra spicy Singapore vermicelli noodles. Yeah, mixed. And then Hong Kong sweet and sour chicken balls with salt and pepper squid, chili squid. For me, that will make my day. That will make my week if I get that.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg.
Okay, we're getting a slight drop there on gold. I don't think it's anything to scream home about just yet.
Potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
All right, we're just waiting on the sidelines right now. See how the S&P is doing. That's been pumping to Ross. Oh my goodness. Yesterday's swing was, wow, volatile, man. 8.5% up on Microsoft. Nice, nice, nice.
Same goes for Meta. Post-market yesterday, also strong results too. That's sending their shares higher by 6.8% this morning. Mark Zuckerberg saying that we are ready to weather economic uncertainty, macroeconomic uncertainty. Results beat, forecast beats, and at the
the same time, the company being rewarded for that, up 6.8%. Finally, GM, even though the numbers weren't good, the shares are higher. We finally got some contours of what a tariff hit might look like to them. It is a profit lowered by $5 billion for the entirety of the year. But Mary Barra is saying that they're continuing a dialogue with the Trump administration. Perhaps that's why shares are higher, saying that they will remain nimble. Those shares up 3.7%, John.
Danny, thank you. A couple of names to watch going into the opening bell. That opening bell is about 38 minutes away. As we count you down, your calendar, your trading diary looks a little something like this. At 9:45 Eastern Time, we'll get some PMI data. ISM manufacturing at 10 a.m. Look out for that. Then after the closing bell, two big names, Amazon, Apple. Tomorrow morning, the payrolls report. And next week, of course, a highlight of next week, looking ahead to Wednesday, Fed rate decision and Chairman Powell news conference. With us here in New York, I'm very happy to say Ed Ludlow joined us with a preview of two big names after the closing bell. Let's start with Apple.
Yeah.
What's front and center for you?
Yeah, this is a company that makes consumer electronics, and all of those parts are moved from one jurisdiction to another around the world. And so if you want to learn something about not just the impact of tariff is a levy, a cost. But as we've been reporting in detail, there's also an issue of moving a good across a border and a customs review and all the stuff about, you know, flying tons of iPhones out of India into the United States. I think you're going to get a really real answer on what's going to happen going forward. Forget the numbers in the quarter gone, I think is what my mate Mark Gurman would say, and look forward.
How easy is it to move production out of China to India to satisfy the demand here in the US?
It's not easy. You know, basically there's a limit on the number of handsets that India can produce currently. Of the millions it sells around the world, it's I think 20-25%, right? So it's also more about when you have an assembly facility. We talk about Apple being highly vertically integrated, but it relies on a contract manufacturer, Foxconn. That contract manufacturer in small cities in China has all of the critical parts suppliers with buildings literally around it. That infrastructure doesn't exist in India currently at that scale. So it's not just saying, oh, I've got to put my assembly plant in India. It's about saying, and then I've got to get the screen and RF components also nearby, and that takes time and money.
There's a larger question also about just their AI development and whether they've been able to get on that train quickly enough to be competitive, right, so that they get some sort of competitive edge and market share. What are we expecting to hear today from that?
I was looking around the table. We all have iPhones, right? I don't use Siri. I haven't used it since it...
Never used it once.
Yep.
Not once. Don't even turn.
I use ChatGPT, I use Meta AI, I use Grok, and I use Gemini to extent on a daily basis. And the Siri functionality, I think the reporting's there that it was sort of rushed and it doesn't offer anything useful. Now, we did have a piece of news that you may have missed amongst everything in the last 24 hours, that Sundar Pichai of Alphabet talking up the prospect of Gemini and its integration into Apple.
Just listening to these analysts on Bloomberg, they're actually saying quite some interesting stuff as well.
The heads have rolled, right? Executives have changed, the structure of the org has changed. But really, it still is a story about handsets. You know, how many handsets do you sell? And whether the attractiveness of the software helps that or not, I think that's what they will focus on.
Ed, it's good to see you. Great to catch up. Look out for Ed Ludlow, Caroline Hyde at 11 a.m. Eastern Time for Bloomberg Technology. Look out tomorrow, 8:30 Eastern Time. Payroll's just around the corner.
At a time when we have the lowest two-year yield going back to September of last year, as people take a look at what we just saw with initial jobless claims, the unkind kind of upside surprise. What does this mean for what's coming?
I'm interested to see what the Truth Social is going to be. Jonathan, you talk about the drafts. I'm sure there's a draft saying that it's Biden's data if it's bad, and there's a draft being worked up if it's really good data. That's all the tariffs and manufacturing and those jobs coming onshore.
Looking forward to the reaction from the strategist, President Donald Trump, a little bit later this week. Coming up tomorrow, Priya Misra of JP Morgan, Sarah House of Wells Fargo. We'll catch up with Jeff Rosenberg of BlackRock, Mohammed Al-Aaron of Queen's College, Cambridge. From New York, thank you for choosing Bloomberg TV.
Welcome back to another special Mutua Madrid Open update for Bloomberg TV and radio from Tennis Channel. Defending champion Iga Swiatek avenged her defeat to Madison Keys in the semis at the Australian Open with a 3-set comeback win to reach the Final Four. After losing the opening set 6-love in just 24 minutes, Swiatek found her feet on the dirt, dropping just 5 games in the last 2 sets before closing out the win 6-2 in the decider.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are going for an 8-day winning streak.
All right, hours in, new hour, new hour.
I'm Shanali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, strong tech earnings are setting the stage for stocks to rally for an 8th straight day.
Coming up next, Apple and Amazon headline the busiest earnings day this quarter, with companies worth a combined $9 trillion reporting numbers today.
And uncertainty remains the buzzword as corporate America seeks clarity on Trump's tariff strategy. All of that and more coming up. But let's take a look at some of those stocks, because Microsoft cloud growth surged last quarter. It did slow down spending for its data centers that are crucial to its AI ambitions, not slowing down the stock at all, up 9% pre-market.
So Meta, Facebook, Instagram, quarterly sales beat estimates. The company raised its AI CapEx plans as well for the full year. The shares are up 7% in the pre-market.
Got another Mag 7 name. Apple, though, down pre-market. It reports after the bell. Overnight, a federal judge ruled that its app commissions are violating a court order, Katie.
And as we count down to Apple and Amazon, the Magnificent Seven earnings so far have been mostly positive despite global market volatility, with Meta CEO Mark Zuckerberg confident in his company's position.
We've had a strong start to the year. Our community keeps growing, with more than 3.4 billion people now using at least one of our apps each day. Our business is also performing very well. And I think we're well positioned to navigate the macroeconomic uncertainty.
Let's discuss now with Bloomberg Technology co-host.
All right, so right now gold is moving back down since taking out that high. The only thing that I'm potentially looking at is if gold is happy to play out of this candle instead at the moment. Right? That's what I'm looking at for now. So if we're gonna use, a breaker structure on the lower time frame, just taking out this low here. So ideally, we should get a pullback and a short move lower, right? Now, am I convinced? No, not yet. I want to see if this will stretch lower. Yeah, but to be honest, we can get a pullback and a drop lower. I'm trying to be very specific with the setups that I take, right? Don't get me wrong, I'll give you guys loads of ideas if you want to take trades, for sure, right? But for myself personally, I'm waiting for really quality setups that are clear. What do you guys say in the chat? I live up north, bro, so all the food spots, all the good food spots on this side. Mark says quality of food is better up north, but more variety down south. Yeah, true. I can't lie, all this talk of a cheeky bit of Chinese has got me thinking, maybe I should get a little cheeky bit of Chinese. Joe says GU could be a buy. What's your setup for GU, bro? Post it in the Discord. Let me have a look. What's your buy setup for GU?
All right, Caroline, thanks very much. Caroline Hyde is the co-anchor of Bloomberg Technology. You can catch her program at 11. Obviously, they're going to be highlighting all of these earnings beats as well. I want to switch gears, though, now to automakers. GM has slashed its full-year guidance after revealing a $5 billion exposure to auto tariffs. The news is one of the biggest financial hits revealed by any company from President Trump's trade war. Obviously, it's far worse than when Ford said it was going to take a $4 billion hit for its EV investment. Joining us now to talk about this is Bloomberg's Keith Naughton out of Detroit. So General Motors really taking a hit, Keith, from these tariffs.
Yeah, they certainly are, Matt. $5 billion is a lot of money. It's interesting, though, because analysts a week ago, before the tariff relief that Trump delivered on Tuesday, were saying GM would take a $10 billion hit. So it's not as bad as first feared because of this recent auto tariff relief, but still quite bad. And they also say it's going to lower their earnings for the year.
I also want to talk about Ford, Keith, because you did see them come out and say that they won't increase the price of vehicles until they see what rivals are doing. How do we expect the industry to be reacting now that we know a general sense of the costs?
Yeah, and GM just on its call said that it's also holding its fire on price increases. These changes in the auto tariffs are causing the whole industry to rethink. Ford had earlier told its dealers it would start adjusting prices in May.
Just posted it, yeah? Let me see.
Hold off. They're going to see what their competitors do. It's going to be an interesting summer for the automakers because if the prices do
Okay, so 2 hour PD SSL. What's that? Is that SMT? So you got high, low, high, pullback, kill zone. Okay, okay, I see what you're saying. So you're looking, what are you looking on? You're looking on a 2 hour. You're looking at this low, this high, high, low, new high, pullback, kill zone, side of here. Right. We've had a slight change on the lower time frame. Low push up. Yeah. Buy is possible for GU. You're not wrong. GU buy is possible. My only thing that I would look at for GU is like with the DXY, you know. The DXY looking like it wants to be a sell right now. And at least for now, and the candles that I'm seeing, I am not sure. You know, for me, I'd still like to see the dollar continue to push up. So I'm not too sure how that's going to affect GU, at least for now. But that's my overall perspective on the pair. Let's see. Defo possible. Right now, we just got to wait for NYSE open. We're going to watch gold a lot today. See if we can get anything on that. I did take a little small short on gold a second ago around this price. So if you guys want to take a small short on gold as well, I put my stop above this high. Why am I doing it? So, just in case gold wants to leave without heading to the higher area. It's still around entry, so feel free if you want to take a really small position on that. We're just seeing whether we are onside or offside, and that's all. So ideally, if I am going to take a main short today, it needs to come from here. If we push up higher, then fine, right? But I'd like to take, you know, the short from higher. That's my main trade for today. Let's keep listening to Bloomberg.
33 live wire electric motorcycles in the first quarter. 33 globally.
Crazy.
Those shares are up almost 2%, but they have lost a quarter of their value year to date. And then Robinhood rising. Investors flock to the retail brokerage to trade the wild market swings. Obviously, this is good for Vlad Tenev's business. The shares are at 4.25%. He is going to join us at 10:30, so stay tuned for the Vlad Tenev interview this next hour.
Yeah, we also want to take a look here at Kohl's, as Katie had mentioned earlier in the breaking news, that they are terminating their CEO, Ashley Buchanan. They have cited a violation of company policies after an investigation by an outside counsel, and they are looking for a new permanent CEO. But this is the year-to-date shares, guys. It has been down more than 52%. Shares have been halted in the wake of the news.
Yeah, and the board also saying the company that Buchanan directed transactions with conflicts of interest. So we're looking for more details there. They also announced preliminary results. This company wasn't supposed to report until May 30th, but they came out and said that their preliminary comparable sales for the first quarter were between -4% to -4.3%. So a lot of bad news there. Shares still halted. We'll bring you the update once they start trading again. But coming up, Tesla denying a report that the EV giant is searching for a new CEO. We'll take a look under the hood next. This is Open Interest.
the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
In case you missed it, on the close.
I think our sports fund is very exciting. We've invested in a number of new leagues that are doing exceptionally well. A number of the investments we've made, we've already seen prices that have gone up already about 50% plus. So what you find in new leagues and new teams is if you're right, it's going to grow exponentially, right? So the whole key and the nice thing about that is you see the ratings the next day. So I can tell you if it's grown, like we've invested in PBR and professional bull riding. That league is growing 30% plus a year.
There's professional bull riding?
Yes, do you want to get on a bull? You'll end up, if you could stay 8 seconds.
I know, this sounds awesome. Do I have to go I don't have to go to rodeo for that. That's
no, you could do it. We are here in New York.
Okay.
We own the New York Mavericks, so you can come anytime you want to go.
Okay.
Come, you'll love it. Yeah, we'll chat offline.
Don't miss the close, live every weekday.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Okay, so gold is pushing up right now. You know the vibes of gold, man. You have to keep entering gold.
The shelves
Hold on.
are going to be open. Well, maybe the children will have $2 instead of $30, you know, and maybe the $2 will cost a couple of bucks more than they would normally.
Many American toy makers and retailers have started to pause their orders as the effects of the tariffs threaten to hit supply chains. Roughly 80% of toys sold in the U.S. are made in China, according to the Toy Association. Now, chip giant Qualcomm is sliding in early trading after giving a tepid revenue forecast. The outlook is renewing fears that the
80% is made in
smartphone
China.
maker will suffer from a looming trade war. Qualcomm
China are the
is
real
seen as highly
powerhouses, man.
vulnerable to the tariff fallout, given that nearly 46% of that company's sales come from China. And Tesla chair Robin Denholm is denying a Wall Street Journal story that reported the board was looking to replace CEO Elon Musk as investors worried about the amount of time he was devoting to his role in government. In a post on X, Denholm wrote, quote, earlier today there was a media report erroneously claiming that the Tesla board had contacted recruitment firms to initiate a CEO search at the company. This is absolutely false, end quote. The CEO of Tesla is Elon Musk, and the board is highly confident in his ability to continue executing on the exciting growth plan. I guess the quote ends there. Sorry, Shonali ended it too early, but definitely a denial.
Definitely denial. We're going to bring in now Bloomberg's Max Chafkin for more on Tesla. And this denial of this Wall Street Journal report was interesting, particularly because you've seen the chair, Robin Denholm, be very silent on this issue before, regardless of analysts after analysts and many other investors saying that maybe Musk is pretty distracted. Maybe he should return to one job.
Yeah, I mean, if this were a normal company, I think a CEO search would probably be, totally expected, right? You have wild swings in the stock price. You have a CEO with multiple jobs, a lot of controversy. Like, of course they would be considering their options. But Tesla, of course, is not a normal company. We got to remember, this board has been trying to pay Elon Musk an enormous amount of money. It's been having this huge fight with Delaware courts over a $50 billion plus bonus package, despite the fact that when you look at the stock price, right, it hasn't exactly done well in recent years. So this is a board that is very much behind Elon Musk, and an investor base that is very much behind Elon Musk. So it's not totally surprising that they're coming out and saying, hey, nothing to this story, let's on to the next.
And you talk about the investor base, and We certainly saw that when he said on the earnings call that he was going to spend significantly more time on Tesla. The stock soared after that. So talk us through the next month, because now, I guess we're in May. It's May 1st. Now is theoretically when he would start stepping back from Doge.
Yeah, I mean, it's not clear to me how much stepping back there really will be. Elon Musk was at a cabinet meeting. He was wearing 2 hats, which, you know, now seeing this Wall Street Journal report maybe seems like a wink or something at the idea that maybe he's wearing too many hats. He shows up to a Trump cabinet meeting wearing 2 hats. President Trump says you can stay as long as you like. I believe later today he's going to do an interview on Fox News. So, you know, he is still going to be engaged in politics. What he is saying, if you look at it closely, is he's no longer going to be essentially camped out in the executive office building, which I do think is going to be a good sign for Tesla shareholders. But if they're hoping to avoid the kind of negative brand associations, you know, these protests, the anger that we're seeing, that I don't think is going to go away.
All right, Max, thanks so much for joining us. Bloomberg's Max Chafkin talking about Elon Musk. In this picture, wearing a hat that says Trump was right about everything. And I wonder if he still feels that way when he looks at how the tariffs are affecting his car sales. In terms of Ford's car sales, they rose 16.2% in this country in April. The company said U.S. sales were boosted by Ford's employee pricing for everyone discount campaign. So we continue to get car news, and global trade, it turns out, is cars. Cars is global trade.
Certainly, and we're going to keep a close eye on that auto sector, but we're also going to keep a close eye on some more movers on our radar. We're looking at NVIDIA because the CEO had asked Trump to change AI export rules, but of course we also had those big tech earnings last night that were very promising. So you are seeing NVIDIA on the rise this morning, almost 4.6%. Roblox up 7.3%. They reported a larger than expected jump in active users for the first quarter. Daily active users rose 26%. Also watching MasterCard up about 1%, but remember, people are watching consumers very closely, and revenue topped estimates even though purchase volume missed. Katie.
All right, so that's some of your pre-market action. We're about 10 minutes away from the opening bell, and we're going to begin today's trading day with Laffer Tengler's Nancy Tengler coming up next. This is Open Interest.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Is this a negotiation or the new rules of the game? It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly. There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
I think COVID is probably somewhat of a proxy for this. Maybe the important difference being, we had this massive uncertainty sort of freeze activity. But at that time, we kind of knew not only what the solution would be, health-related solution, vaccines, but also massive, massive stimulus, both of the fiscal and monetary variety. Now, when you don't really know the rules of the game, trying to gauge, okay, what ends this?
That was Liz Ann Saunders from Charles Schwab speaking on Bloomberg Television this morning. And let's keep the conversation going now with Laffer Tengler, CEO and CIO, Nancy Tengler. Nancy, great to see you again. I think Liz Ann makes some really interesting points when you think about COVID being a proxy to this period, but it's unclear what the solution would be when you think about the tough economic
All right. We're a few minutes out from NYSE Open. Just waiting for that. Looking at the other pairs. Nothing crazy at the moment. Yeah, just more of the same, really.
When it comes to some of the worrying signals in the economy.
A vaccine against tariffs. Yeah, thanks, Katie, for having me. I think she's right. I think there are a number of analogies. But I think what we're getting as an inoculation is we're getting much better earnings than many expected, including me, across the board. I mean, we were optimistic about earnings, but I've been happily surprised. And the guidance, importantly, has been decent and in some cases really good. And so I think that's one of the things that has catalyzed stock prices. We've gotten less chaotic messaging from the White House, so there seems to be more strategic understanding and communication, and I credit Scott Bessent for that. The Fed is on the sidelines, so I think you're right. I don't think we'll necessarily get a cut, but I think as investors, we need to always be looking forward. And what I heard a lot of my colleagues saying in the industry was that the AI trade was overdone. And I think what we're hearing from the likes of ServiceNow and Microsoft is that it's not even close to being done. And Google and Meta are still spending, reiterating their CapEx budgets. So I think all of that is bullish, and that when we begin to see the sort of tariff stop, we'll be good.
I'm glad you brought up Scott Bessent. He said earlier, I think he was on either Fox or CNBC, that because the 2-year is so far below the Fed funds rate, it means that they should cut. He's jawboning Jerome Powell as well. And here you see how far down we've come on the 2-year. Neil Dutta from Renaissance Macro put out a note earlier. The Treasury Secretary knows how to feel the market. He says wage and salary growth is running below the level of the Fed funds rate as well. That's a sign that past policy has already been too tight. Why doesn't Jerome Powell just come out and cut? Inflation be damned, Nancy.
Well, I actually agree with Neil, and we've been really vocal on this. The Fed chairman has been 100% wrong at every turning point. And I think that when I make mistakes, it engenders humility, and I make them every day. But there is no humility from this Fed, and he's right. Real wages, real rates. This would be a good time, as opposed to August and September when we cut 50 and then ultimately 100 basis points, and the 10-year rose. So 100 basis points. So I think the market has expressed a lack of confidence in this Fed, and I think the stubborn sort of heels dug in. We're going to wait for the data. That just means, that guarantees they're going to be too late.
Nancy, you're going to stick with us through the open, but before we get there, let's get a check, Katie, on these markets.
Yeah, we got green on the screen. It is going to be the first official trading day of May, continuing that rally that we've seen. Somehow April was actually a really quiet month. If you just take a look at the monthly performance, down only 0.8%. We saw some pretty amazing intra-month action there, but all things considered, pretty quiet overall. You can see the S&P 500 up 1%. It's big tech that's leading the charge today on the biggest earnings day of this season. We'll bring you the details next at the opening bell. This is Open Interest.
looks like Trump's gonna calm down, guys. It looks like Trump's gonna chill out for a little bit. So we might get some decent price action for a little bit, you know? So I'm trying to take advantage of this time whilst we still have it. Let's try our best. GDX is down pre-market, guys. The past 4-hour candle is not really saying much. 8-hour is suggesting a potential reversal due to the doji. But again, we'll see once we get closer to there. I hope so, bro, because Trump's been messing up the bag. Trust me, Trump has been messing up the bag big time. Like, last month, I barely traded. Last month, I barely traded, and whatever profits I made, it just gave it straight back to the markets, man. It was annoying. So if Trump wants to chill out for a little bit, it's time for the get back.
Louvre's big enough. Why do you need a Guggenheim?
We're a
as well,
minute
right
and
next
something
door?
away from NYSE, so let's see. I reckon stock market will be bullish again today.
Doing so, they have become a part of
I think we've
the
had like
country's and the city's
5.
fabric.
How many days of
And
bullishness we had?
we need to celebrate that. So we
1,
need to
2,
celebrate everybody's identity, everybody's background,
3, 4,
everybody's
5,
heritage,
6. We've had
everybody's
6
history.
bullish
And
candles
what's a
in the
beautiful
past
way in doing
week,
so
2
in these
weeks.
beautiful institutions. These museums are educational institutions.
So it's
and
incredibly
they're
strong
community
right now.
institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There you understand the history of this great land, not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, and futures are very positive, more than 1% on the S&P 500. You can see the gains on the NASDAQ, 1.6% as tech earnings come in strong. Meta and Microsoft really knocking it out of the park, moving higher in the pre-market, and we're waiting to get Apple and Amazon.
Okay. Let me turn down Bloomberg. So right now, gold has opened down pre-market. It's continuing to drop. This little short that we're in is now back down in profit. Right, we'll see if that progresses throughout the session so far. But like I said, we've kind of taken out this high here. We played into this hourly candle. You know, I was anticipating if we'll probably go from there rather than higher. But nonetheless, if we do push up higher, that's also perfectly fine. I'm not really fussed. Either or is totally cool. At the moment, dollar is still just ranging. It's not really doing too much. So we'll give it another 15 minutes to see what it wants to do. I would like to see stock markets continue to push. If we come and look at Bitcoin, Bitcoin is up. Bitcoin is up. Okay, Bitcoin is getting closer and closer to that 100K mark once again. Right, from the lows, we've gone up about almost 25% from the lows for Bitcoin. So let's see.
After the bell, Apple and Amazon. And overnight, speaking of Apple, a federal judge ruled that its app commissions violate a court order. Essentially, that Apple breaks the law. Essentially, that Apple is doing illegal stuff. So maybe that's why you see the shares down early in the trading. Amazon right now up about 3%, Katie.
All right, let's dig into these earnings with Bloomberg Technologies' Ed Ludlow, who's sitting to my left in New York City. It's great to see you.
At least you don't pretend that I'm not seeing to your left. I remember the last time I was in New York, Matt's like, he joins us from, New York City. Well, thank you.
We're always glad you're here.
Thank you.
You know? It's too rare.
A unique privilege to speak to you today on the biggest earnings day of the earnings
probably
season.
is, yeah.
Apple, Amazon coming up after the bell. Like Matt said, we had the M's knock it out of the park last night. What are we expecting from both of these companies? Because there's a lot of drama surrounding both of them this week.
No, I think we start with Apple, and it's just tariffs related, right? Apple makes consumer electronics and electronics generally, and those are physical things where components come from all over the world and are assembled largely in one place, China, some in India. And so we talked a lot about the impact of tariffs on largely bottom line, actually, if you think about how it might pressure margins. But the tariff as a levy is one thing. The trade implications of moving parts from one place to another is an operational risk. And so how Apple talks about supply chain adjustment going forward, the movement of components from place A to place B, and the final product from market A to market B, I think that we'll learn quite a lot. Tim Cook often says, I am not an economist, but you'll also get that macro readout as well.
I want the skinny on Amazon because a fair bit of drama this week already with the scuffle with the White House, and then them saying they will not post those price increases relative to tariffs, but that doesn't mean per se that they won't happen, right?
Yeah, Amazon is much more analogous with what we saw from Alphabet and Microsoft and Meta, right? The story for those three names is core business strong, top line growth, supported by AI investment that justifies further capital expenditures growth. Amazon's the same. The cash cow of that business is its cloud unit, AWS. They're the #1 player in that unit. But there will be a tariff discussion because what is Amazon.com? Again, it's the movement of goods from one place to another, and there are cost implications and logistics implications on the consumer. And you're absolutely right that they denied that report from Punchbowl, but conceded it had been a consideration for Hall, which is products basically below $20, labeling it saying, by the way, this is how much tariffs are hitting you on this product. That ain't happening though.
Ed, great to have you here. Look forward to your program, Bloomberg Technology, at 11. I want to get back right now to Laffer Tangler, CEO and CIO, Nancy Tangler, and talk a little bit about Amazon, Nancy, Walmart, places we would normally see consumers flock at times of trouble. But what happens when these tariffs kick in? Target, I mean, do you start to see empty shelves? Do you start to see rising prices?
Well, Matt, I think it was great listening to Ed, by the way. I think one of the things that we saw in the GDP report is that there was a pull forward of goods purchases and imports. So whether we see that in the near term or not is yet to be determined. But I like where Amazon sits. It's a member of our 5 for 25 and our 12 best ideas portfolio. If they disappoint on earnings, which I doubt, I think that if they do,
still waiting on gold. If anyone's in gold with me, just let me know, guys. Yeah. Just let me know. Gift says need that 100K hit on BTC, bro. Yeah, you're definitely heavily invested, boy. I'm more into ETH right now. Well, let's see how it does. Joe says he took the short on gold. Okay, nice. Let's see how that does. The thing is, we are chopping inside this area, but I am still anticipating it pushing up, like, to be honest with you. But just in case it moves from here, we're gonna be in it till the low. Yeah. It's not even main risk, it's a smaller risk as well. GDX is continuing to print lower as well, which is good. So we'll see how it does so far. But it's quite a chop right now going on. EU's just chopping and changing. What's GU doing? GU's just chopping as well. So we'll see. Bitcoin should be dropping. Yeah, it is. All right. So yeah, we just gotta chill, guys. Chill. Look at price. Listen to Bloomberg. try to get some more information on what's going on around the world.
I'm so excited to talk to you about Tesla and Elon Musk. Of course, the Wall Street Journal reporting that Tesla had initiated a search for perhaps another CEO, and then the board chairwoman came out and denied that. At the end of March, we spoke to you, and you had mentioned that you recently added to Tesla. So as an investor in this company, I wonder what you make of Elon Musk's role in the government and role at Tesla.
Yeah, Katie. Well, so we added, I think, on March 10th, and we already owned it, and we acquired it at about $240 a share. That to us was a good entry point for the name. In the last conference call, the earnings were dreadful, but Elon announced that he was, going to spend more time in the company, and just on a narrative basis, that is positive for the underlying shares. I think you own this stock for the energy business. Yes, they have to sell cars, but full self-driving and AI in general is really what's going to drive this company into the future and the stock price. So anytime we get a chance to acquire it at a reasonable valuation, it's not reasonable compared to other stocks, but compared to its own name, then we step in. But we were actually selling in January in the mid threes because it is a volatile stock, and you do have to be nimble around the edges.
Nancy, I want to pull up a total return index of the Magnificent Seven because you are seeing a little bit of change. You are seeing Microsoft now in the green, but it is the only stock in the green for the index. You are looking at Tesla being the worst performer of that index, down almost 30% on the year. You talked about the ability a little bit to buy on the edges here. But of the group, what else would you buy given the discounts that we're seeing?
Well, I think Meta looks interesting here. As you know, we had sold that stock and added Spotify instead. And that's been a great decision. They're not all great, by the way, Shanali, but that one worked out pretty nicely. I think you want to pick away at NVIDIA here, and we added at the same time that we added to Tesla, we added to NVIDIA, and I think it was around $108 a share. And so if you're looking out 2 to 3 years, that's probably a name you want to own.
Mark says, I did too, but got out too choppy for me. I feel you, bro. To be honest, that's why I did say, just decrease your risk, at least for now on gold. The chop is a lot. This may look like the 1 minute, but if I go from the high to the low, that's 100 pips each way. 100 pips up, 100 pips down. It's a lot. So just sit through it, to be honest.
The biggest day for earnings this quarter, the market up for an 8th day in a row. Really appreciate your candor and your humility. Nancy Tangler there from Laffer Tangler. Now, some of the movers on our radar today include General Motors. That company slashing guidance, saying that tariffs are going to cause a $5 billion hit in 1 year. And yet Mary Barra still thanks President Trump on CNBC. CVS Health up 6.5%, raising its guidance for the full year profit.
Can we meditate on that? CVS raised guidance. Do you know how rare that is in this earnings season? You can see it being rewarded in shares. I do want to point out that CVS is up 60% on a total return basis this year alone. Of course, They were beaten up pretty mightily, but definitely one of the year's dark horses.
Very welcome reprieve after 3 years of declines, including 43% last year. But this is a turnaround story underway.
Yeah, one that's actually working.
And then you can see Shake Shack, my favorite place to secretly go after work. Thank goodness my wife doesn't watch this program. Up 4.33% right now. Shake Shack shares have been hit hard, down, I think, 35% year to date, but it sees slow single-digit sales growth in 2Q, and investors like it.
Yeah, apparently. So definitely some silver linings that traders are finding when it comes to Shake Shack. But coming up, Apple's earnings test. We'll discuss what to expect after the bell with Craig Moffett of MoffettNathanson next. This is Open Interest.
Alright, tapped out that gold. Alert just went off. Cool, cool, cool. I'm gonna take the short from higher. Now this here is the better short,
On the China show.
right? Obviously we have area 1, area 2. So this area that I took a short from is just a smaller lot size one just in case. So this one here we're gonna take a short, and then this one up here we're gonna take another short if this one hits SL. But I don't think we will really. I think we should be okay in around this price. But let's see how it does anyways.
When I got this job 15
we got
years ago, it was
a little bit more
80% of
time
our volume to the US.
to the
It's
end
now
of the session.
56% of our volume. But the fact of the matter is, most of
But
that
so far,
volume
the
is
only thing that I
for
don't like
the
is how.
price-conscious consumers here in the
Hold on, let me
States.
turn this down. It's mad loud. The only thing that I don't like right now is how choppy the DXY is. Like, it's not in a rush to go anywhere. We have this wick pushed down. We have this high. We have this low. You know, you'd anticipate us getting a pullback and a lower low, but even that we haven't had. You know, we've now created a new high, pulled back down. You know, we've been chopping and changing inside of here for the past, I think, almost 40 minutes, really. So I want to see us either expand lower or expand higher. And then once we get that, we can look at gold, you know, whether it's actually congruent with the direction that we want to go in, whether it's a sell or a buy. But for the time being, that's what I'm looking at. I want to see if we can get a little bit out of this range right now. Stock market is dropping, has dropped a little bit as well so far during the session. So let's just see. Let's just see, guys, yeah? But for now, just gonna just watch price. There's nothing else to do. Remember, NFP is tomorrow. That is gonna be the main driver of the week, so don't feel too rushed.
Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Open Interest. A check on the stock market right now. That rally still underway. This is the first trading day of May, and this month is off to a good start. The S&P 500 higher by about 0.9%. Big tech leading the way higher, with the NASDAQ 100 up 1.4% after what we heard from Microsoft and Meta after the bell last night. But Shanali, now the focus is on the A's coming after the bell today.
And one of those A's, Apple. They will deliver results after the close, and shares are down in the early trade after the company suffered a loss in court related to its App Store sales commissions. The judge presiding over the case said that Apple intended to create new anti-competitive barriers and thought that it could get away with it. We're joined now by Craig Moffett, founding partner and senior research analyst at MoffettNathanson. Craig is a rare bear on Apple. There's a lot to talk about here, including how people are buying phones to get ahead of the tariffs. But these legal cases alone, how much of an issue does this create? Because you do have a federal judge in this case deferring the company to prosecutors for a possible criminal probe in this matter.
Yeah, good morning, Shanali. You're right. This is a significant issue, in part because the part of Apple that investors seem to be most excited about for the last few years has been services.
Let's take a look.
And this case gets at a very specific
Okay, we're
plank
pushing down
of
lower.
Apple services
DXY is
revenue,
pushing
and that is
higher.
charging companies for.
Okay. I'm gonna put an alert at this low now. Put an alert at this high. I want to see us break either the high or the low on the dollar, one or the other. It's annoying because Gold's just tapped SL, now it's back in profit again. There's a lot of chop going on right now, so I would just chill. Give it a second. I wonder if Gold's about to drop right now. I wonder. Let's see.
Has specifically declined to withdraw their own recommendation that that those payments be stopped. So it's been striking to us that as that case has developed, and that first you had the finding that the payments were illegal, and then you had the recommendation from the courts that those payments should stop, that it hasn't really been reflected at all in the stock price.
Yeah, $20 billion is not an insignificant amount of payments, even for Apple. Craig, why are you such a rare bear? I mean, I look at the Bloomberg terminal ANR function, and I can see that there are only 3 cells on this company out of 60 analysts. How come this market is so hesitant to say get out of Apple?
Yeah, good morning, Matt. You know, I would, first of all, I would say I am not a bear on Apple. I think I have a tremendous amount of respect for the company. I love the company's products just like everyone else does. My concern has been from the beginning that the valuation for Apple is out of line with its growth expectations. That's, you know, when we moved to a sell rating in the beginning of this year, Apple was trading at something like 2x the PEG ratio of the rest of the Mag 7. So as tariffs the tariff story has developed since April 2nd, tariffs have become almost the only thing that people pay attention to with Apple. But there's some longer term questions that are reasonable to ask about Apple's growth rate that suggests that the valuation was simply too stretched for a company with the kind of growth profile that Apple has, not just now, but is likely to have for the next few years.
Yeah, it's a fair point. I see Apple's PE ratio trading at just around 30, so still quite elevated. Craig, unfortunately, we have to leave it there. Really appreciate your time this morning. That is Craig Moffett, MoffettNathanson, founding partner and senior research analyst. This is Open Interest.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl,
Gift
right?
just said, what do you reckon on the footy tonight? I think we secured a dub. It's going to be a scrappy one, but I do think we secured a dub. It's a scrappy one, but we secured a dub. I think we do, man. I think we do. Spoos is back up, guys. Nasdaq's up. Dow Jones up. I'm nervous. I can't. Yeah. But here's the thing, though. Like, we've had such a bad season. Like, if we can get knocked out here, like, oh well, we got knocked out. It's the end of the world. No, it's not. Do you know what I mean? Like, next year's gonna be shit as well. So, I'm not too fussed. Joe says I might enter gold again. Yeah, it's annoying. It tapped us out, and then now it looks like it's gonna go again. But I'm gonna wait for either the range is high or low to get taken before I enter gold again. But if you want to enter gold, like, sure, why not? Because gold can definitely go again. You know what I mean? Who are we playing again? Is it Bilbao? Hold on, let me double check. Gift says I'm waiting for news in 7 minutes. What's the news in 7 minutes? Is there news in at 3? Oh, there is the ISM manufacturing. I rarely see that thing do much anyways, but it is a high impact, so could do. Yeah, we got Athletic. We were playing Bilbao. They've been looking strong, you know, Bilbao. Bilbao's been looking very strong recently, especially during the tournament. Apparently, Amarin wants Gyökeres. He wants to buy another striker. Crazy. They don't lose at their home ground. We've been toothless up front. Yep, that's true. You know, we've struggled to score goals, man, this season a lot. We've been struggling to score goals.
Doing something about it.
It moved quickly.
Yeah,
moved quickly, and as Katie points out, 12 straight quarters of revenue declines. Clearly, they had to bring in somebody. They thought this guy was the superstar, obviously, because they paid him $20 million for this year. He's going to lose some of that money.
Yeah, I mean, I haven't quite looked at if they've disclosed yet if how much he's going to lose or if they've come out with that yet. But yeah, I mean, might be the shortest tenure of anyone ever. I'm going to have to check.
He's the Liz Truss of retail CEOs.
Exactly.
Yeah, so, I mean, as we keep talking about, you just think about the retail landscape overall right now. Kohl's, it seems like, has some pretty idiosyncratic issues, to put it mildly, but give us a lay of the land. When you think about the overall landscape, obviously, I have to imagine every C-suite right now is trying to figure out tariffs.
Yeah, I mean, we've had a really early read into earnings so far this season. Every single company has talked about the macroeconomic environment, some saying a bigger impact, some saying a lesser impact, but you're seeing McDonald's today. We saw JetBlue, we're seeing GM. All these companies saying the consumer backdrop is bad. People are starting to spend less, prices are going up. This is going to get even worse.
Rich says, I think final is played in Bilbao too, so they're going to come hard.
That's going to translate. So it's not a great time for you to be losing your CEO.
To be honest, I do need to watch that game. I'll probably be in the gym at that time, but we'll see.
Member Michael Bender.
We'll see. Maybe I'll go early today if markets don't move.
Retail history. He has had a number of jobs in retail, and so, you know, maybe they'll pull it out.
Markets are rebounding, man.
It's
Rebounding.
really interesting because even though you have Kohl's down that much this year, you actually have others. TJX, Walmart, actually up on the year.
It was looking dark a second ago.
To do there. Shelley Banjo, Bloomberg managing editor for Global Business.
4-hour candle.
Some more movers on our radar as well. We've been talking about it this morning. Tesla denying a report about a CEO search to replace Elon Musk. You do have Tesla on the rise, about 0.8% this morning. Nvidia more so, 4.2%, 3%. Interesting moves, of course. They are looking for some reprieve from the White House, but also you have the big tech companies doing well. Qualcomm, though, down 8%, more than that. They're offering a tepid forecast. We are knee deep in it, guys.
All right, we're about 3 minutes till ISM manufacturing data release.
That's right. It's all about tech earnings today, and we're up another 1%. So 8 days in a row of gains if we hold through the end of this Thursday. Coming up in the next hour, Morgan Stanley's Sarah Wolf, the CEO of Robinhood, Vlad Tenev, and the CEO of Mizuho USA on the LPGA.
we're micro investors. So as micro investors looking to invest capital, whether it's in private equity or in direct lending, what we're looking for are opportunities to deploy capital at attractive risk return. When we wake up in the morning, we don't seek to avoid risk. We seek to price it correctly. And so in an environment like this, for sure, if you're looking at a portfolio company opportunity, when you think of the value creation plan, you're factoring in now the uncertainty, which undoubtedly will impact the extent to which you're willing to pay for that asset. Now, in our existing companies, in our existing portfolio, the vast majority are services company. And services companies don't have basically the input issues. But I will say that when we look and we roll up all this data for all of our portfolio companies, and it's quite rich, it's just down now below 1 million employees globally around the world. We're 2,300 at Carlyle itself. But in our portfolio companies, we roll up this data every month. For example, the inventory component of PMI was up about 4 points. I know that's not really news that anybody probably would have focused on, but we could see that happening months ago. So immediately when it looked like the new administration was going to come in and there was the possibility of tariffs, you could see purchasing managers immediately mobilizing to start bringing goods in faster because of the uncertainty factor.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Michael Wallace. The White House is touting the new minerals deal the U.S. and Ukraine have signed. Press Secretary Caroline Leavitt.
This partnership represents the United States taking an economic stake in securing a free, peaceful, and sovereign future for Ukraine.
More from CBS's Remy Inocencio.
From Ukraine's position, the hope is that this agreement, which ultimately is economic, will mean that the U.S. will be more inclined to protect its interests that it could now invest in. Basically, that Washington will want to keep its money safe and will keep defending against Russia's invasion like under the Biden administration.
Democrats blame President Trump's tariffs for the economy contracting during the first quarter. Trump blames a hangover from the Biden administration. More from CBS's Weijia Jiang.
Senate Republicans narrowly voted down a Democratic resolution Wednesday aimed at blocking Trump's tariffs. Tomorrow, another key number will add to the overall economic picture. That's when the jobs report for April is released.
This morning, we learned first-time jobless claims jumped by 18,000 last week to their highest level in 2 months. This May Day will feature anti-Trump protests across the country. CUNY law professor Shamtoli Huck.
In terms of working conditions, American workers are worse off. I think most workers today do not have guaranteed pension, health insurance.
Many of the protests will also focus on immigrants' rights. There are more flood warnings for Oklahoma today after some areas got 12 inches of rain this week. Robin Sweden is assessing the damage at her Lexington home.
I can't read this. It's terrible. I've never seen it like this. I want to cry, because my car.
At least 2 people have drowned in the floodwaters. That storm system is drenching the Mississippi Valley today. No need to flash your ID or phone anymore. CBS's Jim Krasula explains.
Sam Altman's iris scanning identity verification venture is here. Altman, who is CEO of OpenAI, is opening.
Let's see how the game tonight is going to play out, guys. I feel like I was on mute when I was explaining. So now that we've broken the range is high, right, for the DXY, the high and the low that I was looking at in the past hour, I want to see, we may potentially hold this high, right? If we don't break above this high and the hourly candle closes somewhere around here and we get a pullback, I want to see us test back into this hourly down candle and then continue higher. Okay, the target of the day is that weekly high there. There's a good chance that we will get it today, but if we don't get it today, it's perfectly fine as well. Okay, gold is just gold is stretching lower, man. Joe, you still there? What can you do, man? Gold does this. It does this. It does this, doesn't it? Gold does this sometimes. Anyways, it's already dropping without us. Just about hit our stop loss by probably like, I don't know, 2-3 pips. Yeah, by like 5 pips. The news came in, gave dollar the strength, and now gold's moving down lower. But nonetheless, it's perfectly fine. It doesn't mean like gold can't turn back around again. You know the vibes of gold, man. But that 4-hour candle looks very, very good to engulf the lows. Now, all I would say is anticipate potentially this 4-hour candle not taking out the low, and then maybe the next 4-hour candle opens, creates the high of the 4-hour, right? Look to test the low of this candle, right, on the 4-hourly, yeah? Look for a test on the 4-hour candle's foot there, with the next 4-hour candle that opens, and then look to take a short somewhere around here to then target the lows, okay? That would be the only kind of setup that I would give you guys for gold, okay? Other than that, thank you guys for joining me on today's live stream. No particular trade today, but that's perfectly fine. I'll be back again tomorrow for NFP Money Day, and always remember theory behind the practice, and I'll see you guys in the Discord for further updates. Peace.